Hey everyone, welcome back to another lesson here on the channel. Today we're going to be talking about why you don't actually need such a high profit margin to start selling an Amazon FBA product. A lot of people think you need 50, 60%, even 40%. It's just not true. We're going to be breaking that down in today's videos. Be sure to stick around to the end, be sure to like, subscribe down below, but let's just get right into it. All right, so I've just moved over into my computer. I've just searched home decor. Any product will work for the example we're about to go over. We can use a little rose quartz thing. They have a bunch of variations. So there's a lot to go over today, so I want to make sure I get through all this. The first thing is that there's this misconception that you need to have a 50 or 40% profit margin to move forward with something. A lot of the time, once you start adding on shipping costs, packaging, etc., insert cards, you're not going to be hitting that. Let me show you what's more likely to happen. So we come in a profitability calculator. It would be great if that worked out, right? But that's usually not the case. You're probably not shipping this for 20 cents per unit. It probably ends up looking something, more like this. So this is your, I want to break this into 3 price points, right? You have your average market price, which is what your competitors are consistently selling for. You have your premium pricing, which is maybe $5 to $10 more expensive than the competitors. And you have your low end pricing, the people who swoop in $5 to $10 lower than your competitors, not higher. So in this case, here's like if we're pricing along with the market, we're at 32% margin, 85% ROI. If we come down here and we get the low end of the market, 17% margin, right? $28.99, 26% margin. If we're at the high end of the market, go to $39.99, we hit that 42%. So a lot of people come in and they almost sabotage themselves right from the beginning because they're pricing as if they can beat out the market on every front. Yeah, you might have a couple people trickle in who pay your more expensive price, but most of the time they're going to be buying the less expensive one that's similar to yours. It's going to be pushing their rank up. It's going to be pulling your rank down. And well, technically a lower sales rank is better, but you know what I mean? Position on the page. You're going to be falling back to the bottom of page 1 after you rank it. The page 2, you might not even get there with a price that high. So it's better to be competitive and have a lower margin and make up for it with volume than to hold on to, your pride or whatever it is that you're trying to hold on to with this higher price and just getting a couple sales when everyone else is making 10, 20 sales a day. Okay, that's not a good strategy. If you can get away with it, right? Like maybe the first 3 months you're selling your product, there's not a lot of people selling that product and you're able to charge a premium for having it on the market at all. You can get away with something like that, right? I've had margins as high as 65%, but it didn't last long, right? Competition will come in. And if I stayed at that price, I would have just lost my positioning on that page and I would have, gotten pushed out of that market. I would like to kind of propose that you shouldn't allow anyone to push you out of a market, right? If they're lowering your price, you need to do the competitive thing and drop your price down, okay? Make it so that the new sellers are fighting with you. You're not fighting with the new sellers because you're the one that has maybe an established listing in that market already. You were making 45%. Maybe we have to cut this back down and we end up going back down to 35%. Then we hit the market average, 32%. And then maybe someone comes in and they go to $27.99. So go closer to that, go $29.99 or come start closing in on what they're charging, but you have the established listing already. So you're going to hold on to those sales. And before they know it, they go down to 23. Look, 17%, 15% margins. A lot of people are really scared to get a return like that when it's actually hilarious because I've been investing in stocks for several years now and I'm excited, like I'm ecstatic to get 10% in a year. So it's okay to get, 17% return, net margin, 35% return on your investment. It's actually a really good return on the money that you're spending. It's like we've been brainwashed in this e-commerce space to think that we need to have 50, 60% profit margins. And so many people are just not even launching products because it's falling somewhere closer to the 28 or the 33% profit margins, they think that's just not enough. Well, guess what your profit margin is if you're just keeping that money sitting in your bank? It's actually negative, right? Inflation is making your money worth less every single day. You wake up, it's worth a little bit less. You may not notice it like that, but that's technically what's happening over a long scale of time. So getting something like 17 or 25%, that's fantastic. All of 2020, my whole storefront's net margin was 25%. It's not 40%, it's not 50%, 25%. Means that 75% of my sales were just exactly that. Sales was covering expenses, all that. I ended up pulling a profit away of $25,000, a little over like $35,000 or something. That's okay. I'm okay with, taking a lower margin on products if it means scaling up. The person who has 10, 20, 30 products at 20% margin, 27% margin, 18% margin, 30% margin is a lot better off than the person who has one product at 45% margin and they won't launch anything that's less than that and they're being so picky. So what I would encourage you to do, I'll come back out, when you're doing your product research, look for a product that doesn't have a lot of sellers. Initially, you can cover some ground and you could take that premium pricing, right? You're the only one providing it, so you get to establish your price. And then, hey, big profits aren't a bad thing. That's not what I'm saying. Don't aim for 20%, but don't, laugh at that either. That's still an amazing return, right? Go try and get 20% on, a property that you're investing in or on stocks. It's rare to get a return that high, and if you did, you should be extremely happy about that. For some reason, when we start thinking about selling physical products, we're like, that's horrible, I'm not going to do that. I'm going to wait for something that's 60-70% profit margin. Initially, say there's only one set of these 3 narrow ceramic tall vases. There's not, don't sell this, but I'm just saying, you're doing your product research, you come across something, there's a couple of them, their margins, you get quotes from suppliers, you go up to Alibaba, get a couple of quotes, and you go, oh, I could make 40% on this. So maybe after fees, after your total A cost, you're down to 29-30%. Fantastic. That's okay. And if it starts at 30%, that's okay too. If you're coming back, it's a good market where you can capture most of those sales. Don't be afraid to start at 30, 32, 33% margin. Sometimes that's just realistically how it happens after your fees, your freight forwarding, your packaging, all of that going into consideration. You're always going to have 40, 50% margins. So don't let that scare you off and don't let it prevent you from launching something. A lot of people think that like all these successful Amazon sellers have like all their products are hyper successful and blown out exaggerated examples of what an FBA product is, like this perfect godly listing with 55% margin and $10,000 in sales. You're making $5,500 a month and it's just perfect. It's really not the case, right? We're just trying to secure a good return on our investment. And to be honest, for me, a good return on my investment is what's beating, the stock market, what's beating real estate. What if you went out and tried to spend your money and get money back in return for doing that, aka investing, those numbers, 20%, 30%, are like what billionaires expect to make on their returns. Hedge funds are getting their clients 20, 30% returns. And that's an amazing feat because the market's making 7%, 8%, 9%, right? I'm not saying go and get 9% margins. That you actually could find better investments. But when you're talking about 20, 25, 28% margins, that's nothing. You shouldn't stop selling a product if your product pricing comes down and goes to that point. If you're starting off a product, maybe don't pick something where it's starting at 25% before ads. Pick something that's at 30%, 31% before your advertising and your costs on Amazon so that you maybe land somewhere in that 20, 25%. But it's okay. Anything above that is just icing on the cake. That's it for today's video. I just wanted to come at you with some thoughts that I had about pricing and profit margins. Hey, I'll leave you with this. It's even okay to go negative or break even sometimes. Actually, on my macrame shelf, the public case study that we did here, I was just not paying attention to it for a while, and my price was apparently a little too high. I fell down to the bottom of page 1. Right now, I actually set my price really competitive. I'm being the one that's going on the the offense. I'm pricing at a little over break even, and I'm okay with not making much per sale because it's making more people buy mine over the competitors' products who have flooded into that market. So mine's climbing back to the top. Once I'm at the top with all of those reviews, those competitors are forced to start lowering their prices. I can start going up a little bit in mine. That's how it's going to work, right? I'm up the top, got the most reviews. So I'll leave you with that. That's going to do it for today's video. Go take some action and don't expect 60% returns. Okay, I'll see you in the next one. Be sure to subscribe down below and like if you enjoyed this video. But other than that, see you in the next video. Thanks so much. Later.